Ladies and gentlemen, buckle up and grab a pen, because we're about to take a wild ride into the land of small and beaten-down stocks. Today, we're going to dive into three companies that are the equivalent of the little engine that could. Domo Inc., Enanta Pharma, and Topgolf Callaway. These three underdogs have been overlooked and underestimated, but don't be fooled by their size, they have the potential to pack a punch and make big waves in the stock market. So, sit back, relax and get ready to learn about the tiny titans that just might turn into the next big thing. Domo Inc. has come a long way since listing. The cloud-based data visualization software company that has made waves with its recent highs and lows on the stock market. It started off with a bang when it IPO'd in 2018 at $21 per share and quickly soared to an all-time high of $97, being a near five-bagger gain for investors who got in early. But since then, Domo's stock price has been on a roller coaster ride. Right now, the stock price is well below the IPO level with a price of $14. The persistent concerns about its slowing growth, lack of profits, and high valuation have made it a tough stock to hold as rising interest rates drove investors toward more conservative investments. But, if Domo falls below its IPO price, is it worth buying again? Let's explore the growth story behind this volatile tech stock. Domo's cloud-based platform enables business leaders to oversee and manage their entire businesses through a single mobile app by bundling together data visualization services, data management and analytics tools, collaboration features for employees, and its own integrated app store. For the past 3 quarters, Domo's year-over-year growth in billings and revenue has cooled off, but they are still expanding. The remaining performance obligations have risen 19% year-over-year to $354 million, while their subscription services gross margin hit a record high of 85%. However, despite these positive signs of growth, analysts remain skeptical about whether or not Domo can continue generating double-digit sales revenue over the next 4 quarters, given that macroeconomic headwinds have led them to reduce their enterprise sales teams, which is expected to throttle near-term revenue growth slightly. Moreover, investors shouldn't expect Domo to break even anytime soon either, as non-GAAP operating margins are still negative and fourth quarter forecasts predict net losses between 0.08 to 0.09 per share, though this is an improvement from last year's 0.39 per share loss. But what really makes this stock interesting at this point is how insanely cheap it looks compared to other tech stocks trading today. Salesforce, which owns Tableau, one of Domo's rivals, trades at 5 times this year's sales estimate, while ServiceNow trades at 13 times, yet here we have the little underdog trading at only 2 times current sales estimates. So, will you take a chance on our beloved wildcard? That depends entirely on your risk appetite, but given how cheap it looks right now combined with positive signs like improved cash flow growth forecasts, I'd say there's no harm in giving it a shot. Just don't forget your seatbelt, cause you're sure going to need it if you're going to ride out these turbulent markets with Domo Inc. Enanta Pharmaceuticals is the next stock we cover. It's no secret that the healthcare sector has been booming in recent years. With the rise of life-saving technologies and treatments, more people than ever before are able to live healthier lives. But one company that has really stood out as a leader in this space is Enanta Pharmaceuticals Incorporated. As a pharmaceutical company, Enanta has been busy developing innovative treatments for some of the most pressing diseases and conditions of our time. From HIV/AIDS to cancer, they have consistently pushed the boundaries of medical science by researching and developing groundbreaking therapies that save and improve people's lives every day. In fact, one of their most recent developments is a COVID-19 treatment called EDP-235, which is currently undergoing clinical trials with promising results so far. This compound is designed to reduce the severity of symptoms associated with COVID-19, while also speeding up recovery times. If all goes well with clinical trials, EDP-235 could be available to patients soon. But it doesn't stop there. They are also working on treatments for other viral infections including RSV, respiratory syncytial virus, as well as chronic diseases such as cystic fibrosis and hepatitis B and C. In addition, they have developed drugs for rare genetic disorders such as alpha-1 antitrypsin deficiency and Gaucher's disease. And they don't just create medications, they also manufacture vaccines to help protect against certain pathogens like influenza virus subtypes A and B viruses plus COVID-19. With so many incredible treatments in the works or already approved by regulatory bodies around the world, it's easy to see why investors are interested in Enanta Pharmaceuticals these days. But what really sets them apart from its competitors is the way it approaches drug development. Rather than simply creating medications or vaccines without any thought given to their long-term effects on patients' health, they carefully analyze potential side effects before releasing products into the market. Something that other companies often overlook or ignore completely when rushing to develop new treatments faster than their competitors. This approach helps ensure that whatever new medications or vaccines come out from Enanta are not only effective but also safe for long-term use, which ultimately benefits both patient outcomes and public opinion about pharmaceutical companies overall. Of course, it isn't just about investing in Enanta Pharmaceuticals either. You can show your support by donating money directly towards research or helping spread awareness about important medical issues on social media platforms like Twitter and Instagram too. So if you want to join millions of others who believe in improving human health through science and technology, then get involved today. Your actions have real power even if you don't have money invested in stocks like Enanta. Up next is Topgolf Callaway Brands aka MODG. The company is the result of Callaway Golf buying Topgolf Entertainment in 2021, and with this merger came a whole new wave of energy and excitement for golfers all over the world. Topgolf has been taking the golfing world by storm since its inception, offering a unique approach to playing golf which combines technology-enabled driving bays, multiple bars, dining areas, and event spaces. With 11 new venues scheduled to open in Q4 2022 alone. An impressive accomplishment given the pandemic. It's clear that Topgolf is on track for even further growth. But what makes Topgolf so special? Well, first off, they offer something called TopTracer ball flight tracking technology, which provides players with valuable data that helps them improve their game. But perhaps more importantly than anything else is their commitment to making sure everyone has fun while playing golf, be it through Angry Birds competitions at driving ranges or other games designed to make golf as enjoyable as possible. The popularity of Topgolf means that they can now look forward to increased demand for their equipment and apparel products too. Last year saw them post record revenue figures due in large part to exploding demand from those new customers attracted by Topgolf's offerings, and with more venues opening every quarter, this looks set to continue into the future too. However, there are some hazards ahead for Topgolf investors too, namely the success of depends heavily on how popular golf remains among people worldwide. If fewer people are playing or rounds played per year decreases, then we can expect revenues at Topgolf to follow suit. Something investors need to consider before buying shares in MODG stock. Furthermore, LIV Golf, a Saudi-backed league, has recently been poaching top talent from traditional PGA tours. While this may be great news for players cashing in on switching teams, it could ultimately lead to a watered-down product on PGA tours which could hurt overall interest in professional golf worldwide. Again, something investors should keep an eye out for when assessing whether or not investing in MODG is right for them. So, there you have it folks, everything you need to know about Topgolf Callaway Brands Corporation, one of today's hottest stocks. Be sure you do your homework before jumping into any investment though, no matter how promising they may seem at first glance. Especially the ones we have covered, as they have a lot of potential to the upside once they become consistently profitable.